Hello guys, welcome to the Train Parrot. In less than an hour we have the PPI report coming in. So in this video I'm gonna try to be as concise as I can and show you the overall picture, how things are looking on different time frames and indicators. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. I remind you, I'm in a quest to get over 1,000 likes in a single video. We still haven't got there, very close. A few days ago, we got 836, and I have to say, I really appreciate all those likes, particularly because retail is not here, so there's just a few of us left still insisting on Bitcoin, which by itself is already a bullish alpha. With every day that passes, Google Trend shows a lower value. At the moment is marking 24, and that continues to be the trend. So far there hasn't been a single meeting, economical event or anything causing a shift here. Let's look at how the aggregated open interest is coming in today. You can see that we were very close a few days ago to break back inside the range above 28.6 billion. We are seeing currently a rejection, so it's not been that easy to confirm that this could turn into a liquidity hunt, confirming a potential bullish signal, telling us that potentially we could go and break from the top of the range, similar to what we did in August of 2024. You can see that neither in August was that easy. We went back inside and then back outside, putting a higher low, and eventually it was fully confirmed. So looking at what we are doing now, I will say we still have hope unless we start putting a new low somewhere in here, making it a lot more difficult really to regain the previous support and then start looking for higher highs. If you're new to the channel, yes, I am doing TA on the aggregated open interest. It's been incredibly accurate when contrasting against the price, finding the divergences and getting leading signals that on the price sometimes are not visible. We are approaching the PPI event so far with the return for February of -6%, pretty much the same reading I had yesterday. The hash ribbons still hasn't managed to put the buy signal. Yesterday we were very close to get a bearish cross, but things still seem like we are about to get that buy signal. I suspect that the hash ribbon indicator requires the price to move a little bit higher for us to get the buy signal. The last time the buy signal printed in here and the capitulation was somewhere there. Notice that the buy signal appeared once the hash ribbons were wide open, the two moving averages. It will be really great to get a buy signal with a move up of the price, creating additional confidence for myself and in general investors that are tracking that signal that has very good reputation for crypto investors in Bitcoin particularly. So in my morning update, I covered already the 4 hour. I mentioned that this line, if you miss it, was originally here. That was the global resistance on the 4 hour. And last night, I didn't do the due diligence after having a breakdown, a fake out, which is to move it and accommodate it to the next resistance. But actually, what I really need to do is leave the previous one as well, somewhere in here for reference, and then start tracking an actual breakout once we get beyond the 54.68. So let's put that resistance at 55 so we can get an idea of how high now the price needs to go to really create a breakout. And if we get it, hopefully this time it's not just a fake out like this, but instead something that is more sustainable. Notice as well that somehow the 4 hour is starting to have and form some sort of channel to the upside. I know it's a little bit early to say, but if we put these lines like this, you can tell that this is starting to look like it's heading in this direction. Of course, that is resistance and you can get a rejection again, but I am tempted to say that if we defend this line now at 40, we could continue in this direction and eventually the price needs to catch up with that, because at the same time, this is kind of turning to the upside. The price is still just going sideways, and that divergence again is also something positive. Very early signal, very easy to get you faked out, but I am observing it and I am interested to see how it develops, since one, I am in a long from 95.2 and I still think that is more attractive for the price now to punish the shorts. 55 is at the moment located at 97.6. That is the resistance that we are looking to break. On the daily, we continue on this dramatic move there, which is nonsense. We are kind of creating this kind of pattern just with single candles, which is just ridiculous. There's no price action. There's just literally people trading a range that is widening up and not wanting to decide whether we go to bottom of the range, to the real actual bottom at 90.5, or to the top of the range to 103.7. Every day we flip the point of control. We started talking about the point of control of 97k from the 2nd of February. Today we are at 13. That's 11 days in a row that we touched the point of control. This has become almost like an obsession for Bitcoin. And that is the main reason why the RSI as well is literally not going anywhere. For 4 or 5 days it gave the same reading. Now you can tell that this is getting a bit wider, and potentially if we close at these prices we will get a higher low on the RSI. But we really don't have in here anything to grab on to 100% confirm one direction. Yes, you can say that this came from here, and from that flag that you can argue is bearish, you should go back to low 90s or below 90. But you can also argue that since we are holding here for so long, shorts are getting exhausted. So you got these two narratives. And I have my bias, which is at the moment bullish, but with the caveat that I am protecting myself in case we go to the low range. So at this point in time, I really don't care if we go to the bottom of the range, I execute my second order, or if we start rallying from here because I'm already in a long. All I care at the moment is let's stop trading this stupid range. It's just so boring. On the weekly, we already have the end pattern, and Bitcoin really needs to make a close above 98.3 by Sunday to prevent everybody and every single channel to start publishing articles and videos about the end pattern and the target of 80k. I'm already hearing some people on Twitter talking about that, not too many to be honest. With the previous head and shoulder pattern everybody was talking about, and that made me doubt it a lot. At the moment, how many people do you really hear on Twitter saying we have an end pattern on the weekly, fully formed, we should be going to 80k. I hear 1 or 2 people a day, but not everybody. And the ones that I'm currently missing are the trolls. Where are the trolls? They left after the capitulation of Ethereum. I never heard anybody complaining or calling me an idiot in the comments. We need them back. Those are the guys that short here and create all the liquidity that allow us to take those sweet longs to the top. But unfortunately, it seems like they got wrecked too big and have little interest in coming back, or no cash. I'm looking at the SOPR as well and making it part of today's analysis. As you can see in the oscillator of this indicator that is tracking how many people are closing at a loss. In these extremes, the low extreme, giving a reading around here, you know that people are taking losses. At the top end, people are taking profits, are closing in the green. Close to being here, you're closer to a bottom. Being very close to this end, you're very close to a top. So from the point of view of this indicator, I remain bullish because we are on the low end. Having said that, you can tell that you can be in the low end like in July 2024, and then early August you can pinch that band and put a new low like around here. So you get a buy signal there, you get some sort of relief rally. This one was 25%, and then you get another one which is the real one. That's why it's great to be prepared for those scenarios. So yeah, we are in the area where people are taking losses. We should be getting closer and closer to reversal and breakout, and eventually getting into these overextended areas where we can decide to close our deal. Or for example, in here, this was October that it pinched the top, but that was not the top. Price managed after these early profit takers to put a double bottom and then rally an additional 60 to 70% to the upside. No news from the Big Whale Explorer. We are still flat. I haven't seen those 70,000 in deposits from large holders leaving the exchanges back into cold storage. So option 1, they've been distributing small amounts in all this range. Option 2, they still have the finger in the trigger and waiting for higher prices to actually execute their planned distribution. Of course, there's an option 3 that they decide, no, maybe we are not gonna sell, and then they withdraw to cold storage without doing any damage. Interestingly, we are having a week full of outflows so far when it comes to spot ETFs on Bitcoin. And yesterday was the largest one with 250, but just to get a perspective, you can see that all this selling consistent during this week still hasn't managed to change the shape of the all-time high. It looks to me like we are putting a low, but not even taking the previous low. So although it's a little bit worrying to see the consistency of the outflows, the sizes are very insignificant to get worried about this particular aspect. And from fear, a few days in fear, now we are back in neutral. And a reminder that Cerberus, my indicator that looks what's the balance between stable coins and Bitcoin, it's still in the warning buy. I suspect that by Sunday we're gonna get confirmed that signal of warning buy. If you're new to the channel, the warning buy tells us to flip or bias into looking for longs. It's not a perfectly timed signal, but it opens a window that can last 1 or 2 weeks. There can be drawdown within that window, but it's flagging conditions where typically there is a flip now back from stable coins into allocating assets. That's because it's been sold off quite heavy into stable coins. And let's go into the liquidity and let's see how we are approaching the event. You can see that for a third time, we are accumulating an amount of liquidity at the lows that is very similar to what already played out being a new low. When we were in here, we observed this one, I entered my first long. Then we rally into 98.5, and at that point, we have again liquidity. We came back down. It formed at this low with early longs, and then they got hit for the second time. So now the question is, given that we are ranging again around the 95.6, 95.9, same range is playing out in there, and we are again building the same stupid liquidity, but this time starts from 93.9 into 93.5, we could say. Are they going to again smash the longs, hit them right where the risk is located at? And if we do so, are we just going to this time bounce and finally go to my area of value? Or are we just going to continue climbing a ladder of punishing every deep buyer that wants to enter lower and lower until we get to 88, where the big price is at the moment? You can see if I scroll down, 89 to 88 is the big liquidation level in the short term. That is definitely larger than going into 101, but if we include the top, which is 107 to 108, then this 88 is not as interesting. That is the same picture, nothing has really changed in the longer term. Higher is larger at the moment, but we are very close to getting there. That's why I don't discard it. 30 days liquidity, we took that chunk of liquidity that was around this area yesterday. That is evident with this pinch there, and now we have 93.9, but it doesn't look as big this third time around, at least comparing it to the 98.9 and the 106. So this time that we are approaching the third event, 1, 2, and 3, I want to make you aware that proportionally the top end at the moment is much more heavy and much more interesting with these individual levels, starting with the 98.9. And we have had a few days in a row where longs are just being punished constantly. The delta is the flattest it's been in months. At the moment, it's just 6K. It's ridiculous. I don't even care below 100K. So 6K basically is telling us that in the short term, the aggregated risk of that delta is just flat. There is enough liquidity to go in any direction in a short spread of the price. This being the paradise for scalpers and short-term traders. You can see how this range is being respected constantly. Like we can put this line like this and let's put this line like that, and you get this flag that is pointing down, and every time it reaches that blue area you can see a spike in bid. When you get into the top, a spike in ask, and that's how they just keep it ranging up and down. And my guess, humbly, is that they are not gonna get away with doing this forever. And eventually one side is gonna be wrong, of course, and we're gonna exit. And I'm so looking forward to that because this range is extremely boring for my particular trading style, where I'm already along and I'm looking for that upside, but I need to wait for all these time wasters doing their scalping. They're having a blast, of course. And many people in the comments have told me, well, I'm taking your entry, but then when we get to the top of the range, I sell it. And to be fully honest, sometimes I do those things when I see that it's extremely obvious that we're gonna continue ranging. But when I have less time and I'm busy, or let's say I'm sick, which I am, I tend to take a strategy that's a little bit more lean back. I put my order, that's my bias, and then I sit and wait. If I feel up to the challenge and I want to pay attention to the charts, sure, then I start scalping a bit more or reducing my position at the highs and then re-increasing it as soon as I see that we are on the other end. Funding rates are in the positive, longs continue on the top end, they're very persistent, you can tell they get liquidated, they hit their risk areas, but they come back and they come back and they come back. That's very interesting. People taking longs at the moment are primarily small accounts, 100 to 1K. We still don't see a lot of activity from big players, just small movements of the 1 million to 10 million. But since this is normalized, you think that this is a big buy potentially from Brownwells, but I can tell you it's not. It's just normalized so you can see it. If I go with absolute CBD, you can see that all the lines are really flat, not taking much activity. Neither the orange is doing a lot. Without that normalization, that's where you can really see the actual numbers. Let's look at the liquidity. I'm gonna have to reduce the percentile to be able to see really what stands out. And the order book is extremely flat, very small orders of volume. Below, immediately above, there is nothing until you get to 98. And at 100K, there is the 40 million in resistance and 44 at 105. On Trading Light, we have 101 as resistance, nothing else beyond. They pull out the 105, is no longer there. Below the price, all that's left is the 78K. As I say, very flat, very little number of orders. And one note that I wanted to make is that we haven't had short liquidations, significant ones, in quite a long time. I call significant something like this, 100 at least. For example, this was in December 16. That was quite a large one when we had a move up in the price. But since then, it is the longs who are taking the hit. That's clear. Fair value gaps, we have all paved the way to the upside up until 104. We took some fair value gaps yesterday, and we produced this new one that spans all the way to 97.4. That's definitely going to help for the people that are trading this range like this. For profit taking up until 97.4, you can tell there that's where the fair value gap ends, and that could be another opportunity for short-term range traders to take profits and once again dump it to this level, which coincides with 93.5. That is the level where you see this liquidity there. I am not playing that game, you know, I'm sitting on my long position. I wouldn't be surprised that they can do it again, but every time they do it, I feel they're getting too confident with the setup and they are not appreciating that from the 12th of February, we got new liquidation levels forming at the top, and eventually the bell is gonna ring and they're gonna say, enough with doing the same thing, let's just trap them all. They are already trapped, some of them there, and they're gonna get hit. At that point, I'll be thinking about reducing my position potentially. I'll let you know on Twitter, Telegram, or Instagram. That's the place where I put the really time-sensitive information. Guys, if you want to trade Bitcoin altcoins, consider a great exchange like Bybit or OKX. Those are the two that I use for my trades. If you use the links in the description to open your new account, you can claim up to 60,000 in rewards on OKX and 30,000 on Bybit. Either of them, by using the link, you get the lowest fees to trade as well. When it comes to exchanges not requiring KYC, I've got two alternatives. One is Bluefin and the other one is 2bit, giving 100,000 in rewards on Bluefin and 30,000 on 2bit. All rewards are based on deposit size and trading volume. Thanks so much for watching. I'll see you in the next one. Bye bye.